Um, Welcome back to another weekly review. I'm doing this review because this week we're not gonna have a Zoom session because I'm busy with other story that I'm focusing on. So I want you guys to watch all this video, practice and understand what is happening on the concept that I'm showing you guys. So, by the way, let me start. If you remember, we had this eye, market come to the down, trades down because we had this block, market trade inside that block. After the break of the eye, then market start pushing to the upside. So now when the market is pushing to the upside, if you can check from this level, there was a void that was happening here, then market couldn't trade down. So we keep on pushing to the upside, then we break this short-term high. You see this short-term high, market break it because this high give us a proper low from here, then we push to the upside. So now check what happened. Markets, this was on Monday. After Monday open, you see this is the one we have the Monday open, the 00. If you watch the previous video, then you understand what I'm showing you here about the open. Then because this candlestick, the open was bearish, so the bearish candlestick opened from the top and closed below. So we put our weekly open from there, then market start trading to the downside. So when market is trading the downside, what you normally want to see is where is our low point that market has to run. Okay, we had this low point, then we target the market to come to this area so that we can see if we can have a proper confirmation of saying market has to push more to the downside. Let me zoom a bit so that you guys can see. Okay, then from here what you're gonna see is market trades for the first time break this low, mitigate this area. See this candlestick, the one we have here, then market push to the upside to come and fill this inefficiency, the one we have here. If we can check here, we have this imbalance candlestick, then we have the inefficiency, the one that was resting inside here. Market return back, fill that inefficiency, target this low and target the other low also. Then what happened, because this is the Monday low, market target this Monday low. From here we break this low point here, then check what happened. Market return again back to trade inside this candlestick. You see inside this candlestick, but at the same time we have the inefficiency plus the OB that was here, then market start dropping. But if you check on London open, market trades this low, then retrace before the New York open, check the way market drop. So market drop all the way to the downside. Then here we have what we call the London kill zone close. After they come back to mitigate this area, check we have this last candlestick before this up move. This is a void. We have a void that is there. Then market pushed more to the upside, then create this last candlestick before they sell. So now check what happened. Market starts coming to the downside, target this low. We break this area because this was the low that give us this high. Then this high, this lower high give us this drop to the downside. Then when market was going to the upside, we normally know that market has to come and mitigate this area. I could not even go to the low time frame to understand what is going to happen or whatever. So what I did from here was I just kept things so simple. I just keep this block. I target the 50%. Then this could be my entry and the stop loss on top. Then market did what? Market did drop all the way down. As you can check, we break. Market come to the downside because we have the inefficiency. I didn't just mark it. You can see it even with your eyes. We have inefficiency plus the HB, the one that is there. Market fill it, then return there, then we sell. If you check, when we sell, we return again back with this fast mitigation, to come and mitigate this candlestick. The one is here, this last buy before the sell. Here we return, we trade inside it for a confirmation of going to the downside. Then market start going where? Market start going to the downside. Okay, market going to the downside, we create what we call the inefficiency. We create another one, what we call the mitigation block, the one that is here. So market drop all the way down. Then we want to try to understand where is the level where market is going to do it. It's gonna start selling again when we are going to the upside. We know we have the mitigation block. We have the inefficiency that is here. We have the OB. Then we need to look for a zone that got confluence. So what I did from here, if you remember guys, I sent you this analysis before market get here. So what I did from here was I took the Fibonacci because this is the low that give me this, sorry, the lower high that give me this lower low. So I connect from there to this down move from here. This is where I connect. Then I see I have my discount area and my premium zone. So where am I going to take my sell position? I'll take a sell position in the premium because this is my range from this high to this low. This is my range. Then I'll check the trades above 50%. This is equilibrium and the 50% is there. Now let me show you with the Fibonacci. If I put the Fibonacci from there, then try to understand, okay, which area am I going to take a trade? You see, on this level, we have what we call the OT entry. Is here. I've already explained to you guys how you need to use the Fibonacci. If you haven't watched that video, make sure you go and watch the video so that you understand all the concept properly. Then I could see this OT entry is aligned with what? With my mitigation block. Then market return to my mitigation block inside my OT entry. Then here could be my entry. Then check what happened before it get there. Market buy, market sell, market buy, market sell, break this low, then return again inside this breaker. Why this breaker? Because it ran the liquidity, the one that was resting here. At the same time here, if you check, we had this inefficiency, then market was resting there. So we take entry from here as a confirmation for us to go where? To the downside. We had so many entries that we could take from the analysis I said. I'm going to show you guys the analysis again if you don't remember it. Then if you can check here, we had this candlestick before they break this low. Then market trade to the low side. We could expect again another entry from here because you know these things happen with this fast mitigation just to send people on the wrong side. Why they're doing this? Because if you check here, we have inefficiency again, inefficiency. But we know when we are selling from here, what is our target? Our target is to take out this level of liquidity, to take out this low point, then market rally to the upside, you see, mitigate that area, then we trade again all the way to the downside. We trade on this zone here. If you remember, I told you guys about this area. I told you guys about this level. I told you guys about this level because you see when market trades to the downside, break the low, this one become a breaker, but market break this area. We expected the market to return to this area so that we can do it. We can take our trade because we had the short-term break from this area. Then market get on that zone. London open, market just trades more like this, then sell all the way down. New York open, you see the New York open was here, then market sell up until this area. The London kill close, then market start doing what? Market start pushing to the upside. We push to the upside, but here there will be another possibility of us taking all this trade, catching all this move. Let me show you. I'm sure M5 is going to be proper. So if we can check M5, what we're gonna see is this: when market was going to the downside, market created this stop, pull back after this break of structure, Then we return, we trade inside this mitigation candlestick, market drop, break again this area, then market starts buying. When market is buying, we could see market leave the inefficiency, the one that is here. Let's see, market leave this inefficiency, the one we have that area. So this could be also another possibility of us coming and taking a trade, because after the break of this level, let me go to M3 on that zone there so you can see what I'm talking about. So after the break of this area, you see this candlestick, we break that one, market try to trade inside here, then here market start buying, push to the upside, then markets come again all the way down because of the inefficiency that we saw on M5, mitigate that inefficiency, push again to the upside. After we break this area, you see we break this level, what do you expect? We are expecting a pullback at any time of the day. Market has to pull back. Then this is what happened. So before we get a confirmation that we need to sell to come to this level, market has to give us that pattern that we normally look, where we buy, we sell, we buy, we mitigate a certain area on the left side, then we break the level, we break the downside, markets return inside this area, then we are selling. So let me show you guys from there. So if you can check from this area, we have this stop ants, the higher resistance liquidity run from here to there, then we break the low, market trade again to the upside to come and mitigate this last candlestick, M5 last candlestick before they sell. We mitigate that area. This could be a perfect sell zone for us to come to the downside. We break again this area, we took again this liquidity here, we mitigate this area. We know the target is below, we know where market is going. Then market trade again to the upside. You can check from this area, market trade again to the upside. What we have, we are trading inside this candlestick. Let me show you guys. We are trading inside this candlestick. This is what we are trading in. We could take our entry, let's say from the open to 50% and our stop loss rest on top there. You see, because we know we have this high, we have this lower high, then we have the break of structure. So here we can get a confirmation. If you want to use M1, you can take an entry on M1 here to come to the downside. Then we go more down. Then what do you see here? We have this area. You see this area here, we have this area, then markets return. When I explain to you guys about this block here, then markets continue pushing again to the upside. Then from here, if you can check, we had again this stop ant, the one is there before inside our zone. Markets rally, markets come again down, markets break this area, markets return inside this candlestick. You see this candlestick here. Then we can check our buy from here. Then the target is where we are targeting this higher point, because we know this high is the one that gives us this low inside our range, and then this is the level where there is a liquidity rest on top there. So we want to see what is going to happen when market is going there. So let me show you guys the analysis, because I remember I sent you guys the analysis in the group for you guys to be able to catch this move. So if you didn't catch the move, then I don't know, is you guys' problem, but let me show you first. The first one, why is delaying? So let it open. I remember I did send you guys this analysis. So this is the analysis where I sent all the confluence was there for us to be able to take this trade. So sharp guys, I hope you are going to practice, and make sure you send your practice so that I can see what you are doing.